Members and guests, today's keynote speaker is a former ultramarathon runner, and while he may have retired from pounding the pavement, he is now immersed in what he readily describes as a marathon of a different nature. Dale Henderson is the Managing Director of Pilbara Minerals. Shares in Western Australian lithium miner have soared from 30 cents to around $5 in just over 2 years, taking the company's market capitalisation to $15 billion. Despite this meteoric run, the title of Dale's address today is The Australian Lithium Industry. We are just getting started. Dale makes the point that the energy transition and Pilbara's role in it is indeed a marathon. As you will hear, the company is developing a host of growth opportunities and has still a long way to run. In a personal career sense, Dale has already run a fair distance, despite his ripe young age of just 40. He is an engineer with experience in both mine operations and development in the resources sector. This experience has included brownfields and greenfield settings across a number of commodities in both metals and onshore hydrocarbons. He has worked for a range of major resource operators, including EmCee, Chevron and Occidental Petroleum. Prior to joining Pilbara Metals, Dale held leadership roles with EmCee in mine operations and project development. Dale commenced with Pilbara Minerals in 2017 as the Chief Operating Officer to lead the delivery of operations and development objectives for the company. In mid-2022, Dale was appointed Managing Director and CEO and is leading Pilbara Minerals into its next growth chapter. Dale is married and lives in Perth. He even keeps several backyard chickens. And I point out there's a common link here. I'm told that in Western Australia, eggs have been in short supply, so perhaps not dissimilar to the shortage of lithium. So to tell us all about it, the lithium, not the eggs, members and guests, please welcome Dale Henderson to the Melbourne Mining Club.
Thank you, John, and great to hear about my chickens again. They're starting to become quite famous with these intros. And a couple of our chickens aren't actually producing eggs, so we are struggling. Firstly, I'd just like to acknowledge the Melbourne Mining Club, Richard Morrow, the chair, the co-patrons, Hugh Morgan, Lee Clifford, and all the Melbourne Mining Club team. Look, thank you for the invite and thank you for the opportunity to speak. To the Friends of Pilbara, hello, welcome. To our joint venture partners, Calix and Co, welcome. Our team and associates, welcome. To business partners, investors, to Miriam Stanborough, one of the NEDs for Pilbara, and members of press, colleagues and friends, a warm welcome and thank you. And lastly but not least, the graduate table, table 26. I look forward to speaking afterwards. And what I'll be taking you through today is the energy transition and where it's coming from and where it's heading. It is an incredible opportunity for Australia and for Australian business. What I'll be taking you through is a little bit about what's driving that energy transition. I'll then step into the lithium-ion battery as a key subset, and then I'll move to the Pilbara Minerals story as one of these emerging businesses which has had this rapid rise and it's got more to come. It's a remarkable time in history that Australia has to capitalise on. But to start with, I'd just like to cover off who Pilbara Minerals is. Now, I appreciate some of you will know us, but some of you will not. And we are the largest, independent hard rock operation globally, which is pretty remarkable given that the growth of the company has essentially been over the last 5 years. We're an ASX 50 company. We joined the ASX 50 as December last year. Market cap of 14 to 15 billion, depending what day, and a cash balance of $2 billion as at the end of December. 800 million step up occurred in the December quarter as a function of the strong production and pricing we're receiving. So pretty remarkable stats for such a young company. The asset we're developing and operating is absolutely a tier one hard rock lithium asset. It's one of the largest globally. It's domiciled in Western Australia. And we've got a planned production outlook of 1 million tonnes per annum, of which we're operating at about 580,000 tonnes at this time. And once we're fully expanded to 1 million tonnes, that'll actually offer a 26-year mine life. So pretty remarkable, multi-decade operation at 1 million tonnes per annum. And as I say, we're only actually halfway up that production curve. So yeah, it's just a remarkable growth story, Pilbara. And you might say, gee, that's just, what an incredible Australian success story. And it is, it absolutely is. But, and a big but, it wasn't always this way. And in fact, only 3 short years ago, the business was on life support, fighting for survival. It was an incredibly tough time. And here we are, a very successful homegrown Australian company under our own steam and own leadership. It's pretty remarkable. So I'll come back to the Pilbara story a little bit later, but to set the scene, I'd like to talk a little bit about the energy transition and what it means for us. 9% of our global supply is Pilbara's contribution at the moment, Kira benchmark. So very much a major supplier. So moving to a bit of a delay here. The energy transition. So absolutely there's a seismic shift in the energy transition underway. And essentially anything which was carbon-based energy is now moving to non-carbon-based energy. And some of you may have seen this data, some of you may not. This is Kira Bloomberg. It was released only 2 weeks ago. And what it shows is the investment in carbon-based infrastructure being fossil fuels versus low-carbon energy investment. Low-carbon energy investment being the blue columns and carbon being the red columns. Now what's striking about this is, for the low-carbon energy investment, is it's just moving forward in leaps and bounds. And you'll note that the data shows from 2004, so it's coming a long way. In the last 2 years, there's been this sort of 30% incremental leap and then another 30% incremental leap. So last year, $1.1 trillion investment in low-carbon infrastructure, which pound for pound matches that of fossil fuels. So for the first time in the world's history, the same money is going into low-carbon infrastructure, which is incredible. Now, a key subset of this low-carbon infrastructure is the lithium-ion battery. Here we go. Sorry about this, the lithium-ion battery. Now, the lithium-ion battery, of course, is an energy storage device, and it's carving out a home due to its unique combination of energy density, recharge efficiency, and cost. And I'm sure all will be aware that there's quite a few emerging use cases for the lithium-ion battery. EVs, of course, e-mobility, mass energy storage, there's surfboards, there's even planes coming. So what we're seeing is this emergence of the application of the lithium-ion battery. But of those use cases, the EV demand set is well and truly the principal demand set for lithium-ion batteries. This data from Wood and Mackenzie really illustrates the point of how big this could go in the EV space. So you'll note this ranges from 2020 to 2050 is the x-axis there. And many of you will be aware of pretty much all of the major car companies have made declarations around moving their carbon-based cars to non-carbon electric vehicles. So we see just more and more demand coming for EVs, but it's not just EVs. And the mass energy storage segment is another key growth segment. This one's a bit harder to get visibility on compared to EVs, and the reason being is it really is ploughing a new path. There is no sort of no sort of forecast to really utilise in this space because it's very uncertain. But benchmark minerals reported a 290% leap between 21 and 22, so it's definitely picking up pace. Does lithium ion play a big role in mass energy storage in the future? Question mark. I think it has a role to play, but it's likely, I think, there'll be other storage devices come to bear. Now, what does all this mean for the forecast demand and supply for lithium? So care of benchmark minerals, their forecast here compares their supply case being the columns versus the demand case being the thick line that you see. And as you can see, there's definitely a deficit emerging out at 2040. But just to put this into perspective, I mentioned that our operation is one of the largest in the world. Now, if we were to take, say, 2030 as a sort of a line in the sand, you'll note that supply versus demand, it looks about line ball call. Well, we estimate for 2030, that volume on an LCE basis is the equivalent of 16 of our operation. So remember, we've got one of the largest globally. We need 16 equivalent to be operating and online to match the demand case. And our particular operation took 4 years from first drill hole to production, which is breakneck speed, and we're still ramping up. We're only at a half mast, half our production profile. That 16 I mentioned is calculated on going to the full 1 million tonnes per annum. So there's a lot of operations need to come online. It's going to be incredibly tough to bring supply on to meet this demand. And that challenge, I think, is set to continue because as you jump out to 2040, you can see that widening gap between supply and demand. We're using our operation as a metric. Just the gap alone is another 12 more operations, which would have to come into place in addition to the 26, which would be required at 24, to be a sum of 38 of our size. So hopefully that gives you a bit of a sense of the scale required, and that's just lithium. That's without talking about nickel, graphite, and the many other critical minerals which are required to support the emergence in this space. So that's a bit of the look forward, but how's pricing been going? Now, the pricing graph really tells a story of really the formation of the lithium-ion industry. When I joined Pilbara in 2017, the sky looked bright. I believed the story, and we were seeing the first uptick in lithium. And new highs in lithium chemical pricing were struck in early 2018, about $25,000 per tonne, as you can see on the left hand of the graph. Where Pilbara was at was very much in the early stages, but shortly thereafter you'll note the decline in pricing. What was occurring there was demand retreating in China, because between the years of 2018 through particularly to 2020, the global consumption was very much China, and at the start of that consumption was very much EV subsidy fueled. But in early 2018, Chinese government started to pull back those subsidies, and what played out from that point was this reduction in pricing, which was incredibly tough for the industry. And it continued to reduce the pricing, and it was a fight for survival, which I'll come to later. But moving to about 2020, and very much coincident with COVID, a lot of the world, a lot of the governments were looking to stimulate their economy. And one of the levers they chose to pull was to pour funding into really new industry, of which EVs and EV subsidies was a key beneficiary. So shortly into COVID, around about mid-2020, a lot of Europe started to deploy EV subsidies, and shortly thereafter, Europe, pound for pound, was consuming more lithium than China. And then shortly thereafter, the US and North American subsets started to pick up, particularly the Biden administration started to move forward powerfully. And what's followed since, particularly over the last 18 months, is this increased demand translating to increased pricing, and that's what you see there. So the reason I reflect on this story is 2 points. The first is to say this is the emergence of a new industry, number one, and number two, what's changed is the structural demand. It's moved from a China-based consumption model to a global consumption model. So for the investors out there who worry about, gee, will 2019, 2020 happen again? I can't say no and I can't say never, but what I point out is the structural demand. It's a completely different world now. We've gone from Chinese-driven to globally driven. So moving from pricing to the Pilbara Minerals story, and as you can hear from that pricing journey, the establishment of the industry, it's been a roller coaster, and it's been a roller coaster that Pilbara has enjoyed with white knuckles, holding on for dear life for some of that. But it's a remarkable story of this young Aussie company which has fought its way into existence, and here we are, an ASX 50 company. Now these good-looking roosters are some of the founding geos, and the very two founding geos are John Young in the blue shirt and Neil Biddle. Now Neil's not in this photo, but we managed to find a photo which picked up the rest of the gang. And this team actually all went to uni together. 1985, the WA Institute of Technology, these are the graduates. And here they were some 20 years later developing what they thought was going to be a tantalite mine. They were on the hunt for tantalite, and by 2013 they were underway, pulling back the overburden. By 2015, John Young went to the World Lithium Conference in Singapore, where he heard from the buyers of lithium, being the ceramic industry, and the ceramic industry said, gee, there's this thing called the lithium battery. We're a little bit worried. It might compete for our supply. And of course, John twigged, gee, we might be onto something. And then what followed from there, the rest is history, as they say. By 2016, Ken Brinston, the former CEO, my predecessor, was engaged to raise the financing, and he brought with him Alex Eastwood, Chief Commercial Officer, and Brian Lynn, our CFO, and they went to raise the money. They couldn't raise it locally and had to go to the Nordic bond market to raise the dollars offshore, because we could not raise the dollars here. So although it was still regarded as a critical mineral, it was not regarded as that critical locally. By 2017, I joined the team charged with stewarding the building the operation, then the expansion. And by the time we'd got the project built in 2018, we were just in time for the downturn. And that's what we had to endure. And we went straight into this chapter of what we phrased the lithium winter. And it was cold, bitter, and it just kept going. And it was a fight for survival, absolutely. And for us, it was all about balance sheet defense and being able to preserve the company as long as we could, so that we could see through the winter and be on the other side of it. But it was tough, it was brutal. We had to save cost in every corner. What that looked like was 2 rounds of redundancies, standing down our mining contractor Macca for 5 months, who, by the way, were absolutely fantastic and cooperating with what we needed to do. A lot of tough decisions had to be made, and a big credit to the board of Pilbara Minerals for having the fortitude to take those tough decisions and have the conviction to follow through and see it through to the other side. But to put it in perspective, FY20, we only operated for 30% of the year. We finished the year with a $100 million cash loss, and we had that Nordic bond debt hanging over us. A really, really tough period. And I recall it was so monumental getting a sale. We had a bell installed in the office, and it was just absolute elation when we'd get a sale. We'd ring the bell, celebrate. I'd text site saying, turn the plant on, we've got another sale. And I also remember being in China with Alex, our commercial officer. We'd be in the foyer of our customers' offices, waiting for a meeting, getting in and performing the performing seal dance, as we called it, where we begged, pleaded, cajoled for that next sale. And again, when we were successful, we text site and said, turn the plant on, we've got another sale. So incredibly tough, but we managed to survive the storm. And come late 2020, the ice was thawing, there was some signs of spring, and we were starting to have some confidence in the outlook. Now, coincident with that time, the neighbouring operation, Altura, ran out of rope with their lenders, so we acquired it. We had to max the credit card and the overdraft, but we got the deal done in care of some great supporters, including Oz Super, who's here today, and we acquired that asset, and shortly thereafter, the market really began to turn, and so between 2020, sort of 21 onwards, we've been in this ramp-up mode, effectively. So where we are today is incredibly busy. So from a production perspective, it's going well. We've put the foot down, we're ramping up as rapidly as we can, and for the last quarter, we delivered 10% more production on the prior quarter. And from an expansion perspective, we've been expanding that operating platform as rapidly as we can. So the blue that you see there is our current production capacity, 580,000. The green bolts on another 15 to 17%, being 100,000 tonnes. That's being built as we speak. And then the next leg up is the light green, going up to 1 million tonnes per annum. So that investment decision is going for FID later this quarter, and we'll look to get that built as rapidly as possible. But beyond delivering more lithium concentrate to market, we've been also pursuing chemicals involvement, and our first foray into this regard is our joint venture with POSCO for the development and operation of a 43,000 tonne lithium hydroxide plant in South Korea. What you can see here is the sort of the future pictorial view on the right, and on the left is a shot of construction about 6 weeks ago. We're absolutely delighted to be partnered with POSCO. POSCO have actually been in lithium for about 10 years, and this particular operation is at the doorstep of existing battery materials participants. And in fact, you can see one of them there. POSCO Chem is the blue buildings on the left-hand side of the left photo. But LG Chem, SK Innovation, EcoPro, these are all existing battery materials participants domiciled in South Korea. So as much as there's a lot of talk about emerging battery hubs, a lot of it's new, a lot of it hasn't been built yet, except for the likes of what we see here in South Korea. So delighted to be partnered with POSCO, and we look forward to doing more with them. But for Pilbara, a lot of what I've just described there is where we've come from, producing more spodumene concentrate, our involvement in chemicals participation. Where we're heading ultimately is to do more chemicals, but more sustainable chemicals. And one of the key pieces we've started to work on, and this speaks to the opportunity for Australia, is looking to do more value add at the mine site. The product we delivered to market today is fairly low grade in lithium. It's a 6% lithium oxide, and therefore the 94% which is left over is other stuff. It's other stuff that, frankly, our customers don't want and don't need. That's aluminosilicate. So what we actually ship to market through trucks and then vessels by volume is actually very large, with only 6% lithium oxide, 94% other stuff. So what we've been working on is adding more value-add steps at the mine site to do a level of processing to upgrade that product. Because what we'd like to do is ship a better product to market. So with that end in mind, we've partnered with our friends Calix to do exactly this, to put more value-add processing at the mine site, concentrate our product further, and what we've been working on is a product called lithium phosphate. And what that will do, if we get this right, is take that 6% concentrate, upgrade it to 35%. All of that aluminosilicate, the 94%, gets left at the mine site. So that's number one. Material concentration step up and lithium. Number two, leave the waste at the mine site. And number three, a big step down in the carbon energy intensity. And this is where particularly Calix's involvement is instrumental. And what the Calix team have been working on is electrified vertical calciner, which we think has got the promise of being a much better tool for the job compared to the conventional big, large rotary kiln calciner, which many of you will be familiar with as gas-hungry, coal-fired, inefficient, very, very carbon energy intense. The Calix team over the years have been developing this vertical calciner, so horizontal to vertical, making it electric, and therefore being electric you can plug in, of course, renewable energy. So we actually began our relationship with Calix in 2019, so during that downturn, and to the board's credit, they chose to continue to fund this work. So a big credit to the board of Pilbara for funding that, because of that funding, it's matured through to where we are today, where we've done scoping studies, test work, which is all positive, and now we're moving forward to do a demo plant. And so all going well, we will approve that, we'll build that at the mine site, and we'll start to actually test this flow sheet. Now, if that all goes well, we'll look to go commercial. We'll expand for our operation, and we'll look to bring it further to the world, and we think that's got to be better. That's got to be a better product for market, a more sustainable product for market, but we'll see how it goes. It's very much still R&D, but as I say, it shows a lot of promise. Now, as it relates to that R&D journey, I just want to acknowledge Pilbara's on a journey itself as it relates to renewable energy and displacement of our own carbon energy. We've got a long road ahead of us. We're a young company. We're very much carbon energy dependent, but we are getting underway. And what you see here is our first piece of renewable energy, being a 6 megawatt solar farm. So that got energised last quarter, so delighted to get that underway, but it is very much a first step on our path to a lower carbon future. So where that brings me to is, well, what's the opportunity for Australia? And as you've heard just now, there's a lot changing. You know, we've had this seismic shift and the want to move to a more sustainable energy, and that's igniting a whole plethora of different industries to step forward, one of which is the lithium-ion battery, and of which, of course, Pilbara Minerals is one of these emerging companies. But before I speak to the opportunity Australia has, I just want to reflect on just one last little story. And if there's one thing I'd like to leave you with is just to say, you know, Australia has absolutely been a leader when it's chosen to be a leader, and it's absolutely been successful in new different areas when it's chosen to be. And I stumbled upon the Netflix documentary only last week for the 1983 America's Cup, and I recommend everyone should watch it because it is so inspirational to be reminded of that time where, you know, a bunch of courageous Australians said, we're going to have a crack, we're going to win the America's Cup, and we're going to do it. And they got the funding, they were bold in innovation, they supported Ben Lexon with his modern, it was this revolutionary keel, moving from the vertical keel to the winged keel. And that, in combination with some fantastic teamwork and training, they were successful. And they did what was thought to be the impossible, which was to claw the America's Cup out of the smug hands of the New York Yacht Club and brought it back to Western Australia. Well, of course, Australia. And it's just, and I watched this documentary and I was absolutely inspired by it. And as I say, I encourage you all to watch and get your teams to watch it. So the takeaway is Aussies can win and do win when they set their mind to it. And Australia is positioned like no other to capitalise on this seismic shift in the renewable energy. Australia's got the resources, it's got the land mass, the coastline, it's got the minerals in the ground, it's got the stable domicile. You know, Australia is the geopolitical partner of choice, you know, and I tip my hat to the government and to all of the existing team, both now and in the past, who have established those cross-country relationships of which we have between South Korea and Australia. Had those foundations not been so strong and stable, we would not have the POSCO joint venture we have today. So we shouldn't lose sight of that. And lastly, Australia is a hub for innovation. The Calix team, a case in point, I had the benefit of going out to Bacchus Marsh just yesterday, right here, short drive from here where their testing facility is, and got to see where just the amazing work that they're doing. So this is right in our backyard. So my closing thoughts are to put to you, well, given we've got these ingredients, what do we need to do? Well, there's three pieces. One, We need bold, courageous leadership. Think about that team on the 1983 America's Cup. 2, we need investment in innovation. We need to fund the new Ben Lexons, those new designers of the winged keel. We've got to fund those into existence. We've got to allow it for trial, and we've got to accept that there's some risk involved. And that's exactly what Pilbara's doing with Calix, working together to find a better way. And again, credit to the board who chose to support that investment, even though we're in the depths of the downturn. And lastly, most importantly, it's about that collaboration. We've got to find partners, and we've got to work together because we won't solve it alone. So those 3 things, the leadership, the investment and the collaboration, I put to you are musts, not shoulds. We've got to do it. We've got to do it for all of our stakeholders, including our future generations. The energy transition is only getting started, and so is Pilbara Minerals. Thank you very much.
Dale, I think you're going to be thanked by someone else, but I'll start by saying thank you for a really interesting talk. There's no straight lines at all in commodity progress, and hearing about the bumps, particularly the bumps behind what is now a successful story, is always really interesting. So congratulations to yourself, the Pilbara team, and the fortitude behind that. Over to questions from the floor. If you've got a question in mind, first one over here, please do stick up your hand. We've got a roving microphone. All that I ask is that you state your name and your affiliation before you ask. And I know there'll be people busting to say, Dale, thank you, you've paid off my house. Save it for later. We'll talk about that in the aftermath. First question just over here, Dale.
Yeah. Adrian Prendergast from Morgans Financial. Thanks for your presentation, Dale. It's extremely compelling towards the strong fundamentals that really underpin lithium long term. How do you feel about the disconnect between those fundamentals that you do a good job showing versus how equity and asset markets price assets within lithium? It reminds me of the early 2000s where iron ore first started to break out, and I can tell you as an analyst we were all wrong then as well. Does it compel you to pursue more inorganic growth while you can, or just your view on that?
Yeah, no, thanks for the question. Now, first you'd say, look, it's tough because it's the birth of the industry, and lithium's come from a very small base to something quite larger, and because it's so immature, having transparency on what is occurring has been very difficult. And then add to that, there's been certain groups who have tried to leverage that volatility for their own benefit, and that's added some very contrasting views on what the market is made up of and where it's heading. And because of that, that's created confusion, it's created volatility. Now, the antidote is transparency and transparent pricing. And by the way, this is actually one of the innovations Pilbara's worked on, which I didn't have time to mention, and working with another great Australian company, being GLX, where we deployed a platform for trades, which gave the market transparency. It's eBay for spodumene, or eBay for our battery material, if anyone hasn't heard of it. That's really key, but I think what's needed is more transparency, more pricing points, and what that'll enable is more confidence in the market, and then futures trading and the like will all come good, which is like the iron ore journey. I think the battery materials industry is at the start of that journey. I think it's all yet to come.
Hi Dale, Trinity from the Melbourne Mining Club and KPMG. Do you have a clean energy transition plan? And if you do, what does that look like? And if no, what are some of the challenges you're experiencing to try to achieve this low carbon future? Thank you. Sure,
no, thanks for your question. Yes, we have an energy transition plan. What does it look like? I would describe it as hurrying to put in the basics first. Likes of that solar farm first tranche that I mentioned, there's much more of that we need to do. So I put that in the easier category. We've got a lot more to do in that in the first instance. That's really sort of phase one. Phase two is about starting to try and tackle some of the more difficult challenges, and these are challenges which everyone's trying to solve. So in particular, heavy mining equipment is a key one, transport is a key one, and then moving on to things like chemicals and how you source those, how are they how they manufacture it, etc. So we're very much early in this journey, as you would have seen from our presentation. The key challenge for us is whilst we're trying to do this, we're trying to do a lot of other things. We're trying to grow our base business at the same time. We're trying to grow chemicals. We're trying to do R&D with Calyx. Plus, we're trying to decarbonise. So there's a lot going on. So for us as a business, it's really growing pains would probably be our key challenge.
Just over on the left.
Brian Campbell from Avenira. Dale, could you give us an update on your lithium phosphate project, particularly the schedule?
Sure, no, thanks for that. Schedule-wise, the next key date is the FID decision for the demonstration plant. That's really the key point we're working towards. Once we get to that point, that will really inform the next couple of dates which follow. So, i.e. how long to build the plant, how long to operate the plant, etc. So expect by end of the June, sort of June quarter, we should be able to update on that one in a bit more detail.
John Denise from Paragon. Dale, congrats on where you've got to today with Pilbara's progress. Obviously, you've got a lot of organic growth ahead, getting to 1 million tonnes per annum. That won't be easy, though. You know about your assets' complexities, but you're in an enviable position, amazing balance sheet, strong currency in your paper. You've recently hired a top M&A banker that's an expert in this space. How much of your time are you putting into seizing on the growth opportunities, you know, finding the next 1 million tonne per annum type asset? How much of a focus is that for you?
Sure, yeah. A good question. And you kind of your framing kind of helps answer it. We've got a really full plate with the organic growth. And so the way we think about our priorities is the operating platform, number one, expanding it, number two, 3 more chemicals, because we think they're the quickest routes to create more value for our shareholders. 4th is the inorganic sort of growth, the what next. And yeah, the appointment of John Stanning is really the start of our thinking. He hasn't joined us yet. He starts next week. But he'll obviously start that process of helping us as a business think through the where to next. But we're certainly in no hurry to do anything in that regard, given we have a full plate.
I think you might have just answered my question. Angie Ellis, private investor and happy shareholder. Thanks for sharing your story, the Pilbara story. I can't wait for the movie to come out. Yeah, I was going to ask about John Stanning and just other recent appointments and what that means for the future of the business. Yeah,
sure. So, obviously the growth that Pilbara's gone through has been pretty enormous, and it's really reflected in the executive team, to be honest. So we've had a very small executive team of 4. 2 of those executives, it's been a good 6 plus years, 6 to 7 years, being Ken, the former CEO, who's keen to bow out and do more windsurfing, and 2, Brian Lynn, our long-serving Chief Financial Officer. So there's 2 old war horses moving forward. I'm one, Alex Eastwood, the Chief Commercial Officer, is the second. So we're in a process of replacing those 2. We've got a new COO started, Vince. We've got John, who's come in as the Chief Development Officer. We've got a Projects Director coming in the form of Paul Laybourne, given all of this growth expansion. And we will have a Chief Sustainability Officer to come as well. And I think that completes the set. I've actually got one of our recruiters here today. I should check in with them. You can remind me if I've missed any off the list. But we're very much growing our team, and that's just reflective of us gearing up the business to do more things at the same time. So it's pretty exciting. Yeah.
Hello, my name's Paula White and I'm from White Springs, from Western Australia and from the Pilbara region. My question to you is congratulations for your journey to date. I'm a Bunjima traditional owner and I want to understand, do you have a reconciliation action plan and what's your strategy around Indigenous employment?
Yeah, no, thanks. No, we have quite a detailed strategy on Indigenous employment, and you're proud to say we've worked closely with the Nyamal community since inception. And I'd tip my hat to Ken particularly, who really established those relationships at the outset of the project, and what we've done since is continued to work closely with Nyamel, and yeah, pleased to say that relationship's going well, and we're continuing to do more and more activities together. The most recent one actually being some overnight camps, of which actually our director here, Miriam Stanborough, actually went and attended, which is pretty neat. So the relationship-wise, it's going well. We're doing more and more activities together. The reconciliation plan is one of those things we've still yet to do, and we've still got to get that done. But it's absolutely part of the list of maturity steps we're doing. Yeah.
Last one, just over here.
It's Neil Parker, retired. About 2.5 years ago, I came to a discussion here by Pilbara Metals. I was so impressed that I rushed out to my broker the next day and bought quite a number of shares. Not enough. But they continued to go up and up, and I was very impressed. But I thought, money in the bank, my wife needed new shoes. So I sold them with the intention that I'll buy them back in a couple of months when they're a little lower. They've never come lower. But I think today what I'm most impressed about is the fact that you've decided to go down the path of adding a bit of value to our raw material. And I think this is the most important thing that we could ever think about doing in Australia, adding more value to the material before it goes to somebody else to use. And I thank you very much for that. A most enlightening speech. Thank you.
Well, thank you very much. And always good to hear from a happy shareholder.
Just wait around here for a moment, would you? Well, thank you, Dale. I don't think you've had any problems at all in generating curiosity and thought-provoking from the audience, but it's not for me, it's for Patrick Smith, the Managing Director and CEO of EmCee Consultants, to deliver the vote of thanks. So please, Dale, will you stick around for a moment while Patrick gives us a few words?
Thank you, Dale. The energy transition conversation is well underway. The current and future demand for future-facing metals is of great interest to all of us in the minerals industry. Fossil fuels, oil, gas, and coal, provided 84% of global energy 20 years ago. Fossil fuels continue to provide more than 80% of today's global energy needs. A takeaway for me is that the future supply and demand of these minerals and metals is unknown. And it's hard to see that global demand and supply could stay the same, as the objective is to make significant inroads into the fossil fuel contribution to global energy. So at the moment, Pilbara production is 9% of global supply, double, 18%, but that assumes that supply and demand are unchanged, which probably is unlikely. Members and guests, please join me in thanking Dale Henderson.
Yes.
Head for Paul, who will take a photo.
Excellent, look at that.
Hang on, I'll just take those.
Thank you. No, thank you very much. Thank you to the Melbourne Mining Club. And it was suggested to me just before to keep this on my desk for any performance management chats, which I thought, that's a bit grim. But thank you very much. Thank you all.
Thumbs up.